Hi, if you are heading your company finance department and you are in the finalization of various target of this close fourth quarter ending, one of the schedule of your target may be to close the renewal of your major insurance policies before 31st March 2024. And if so, here I have some very valuable input for your information which will definitely help you to minimize your premium outgo to the extent of 20 to 25% minimum. Shall we go ahead? Yeah, hi, this is Jay Gopi Das. Welcome to my channel Just Jay Gopi. My dear friends, I have been sailing in the ocean of insurance for the past 4 decades, almost 40 years. Almost close to 10 years, I was heading the corporate risk management of a big corporate company in charge for the total insurance requirement of the company. And I was also almost a single point of contact for all the insurance requirement of the corporate company. And also before that, for a short period, I was working as a broker, and before that, major portion of my service, I was working as an executive in a leading PSU insurance company and also servicing a big corporate companies of their insurance needs and requirements at various stages. Every year, you must be going through your renewal exercise process, which normally I do suggest to go for 2-bid tendering system, including reverse bidding and also final negotiation. After completion of all this process get over and it will come on your table, the premium outgo which need to be approved, also to placed before your board and MD for the approval. If you find the premium outgo total is increased comparatively to last year, minimum 20 to 25% and up, then you may be a little bit not a comfortable position to explain to the management why the cost is going up, though may not be, you have not expanded. If you ask your team what is the reason why the premium has gone up, is it the insurance rate has gone up? No, insurance rate has not gone up. Then, sir, we have been asked to take the insurance on reinstatement value. Yeah, dear friend, here we are specifically going to talk about what is this reinstatement value, why it is increasing your premium outgo every year 20 to 25%. I tell you, this reinstatement clause attached to the policy is a myth. There is no real purpose is going to be served by taking this clause, by insisting this clause and paying this much premium. After listening to me, you will also agree to that. What is reinstatement value? It is normally understood as a new for old. Your property is of 10, 20, 30 years old, which you might have purchased for some amount, and today the value might have gone up much more higher, and you are advised to take insurance on that new purchase value, present value. Then in that any case of damages and claim for that old property, insurance company will settle you the claim on the new present value basis. This is what a simple understanding everyone will tell you. So based on that, even your bankers would insist, your insurance company will tell you to do that, your agent and broker, as well as your company auditors will also ask you to insure it on reinstatement value basis. According to me, it's a myth. The reality, it is not going to be settled on the reinstatement value basis. Friend, I give you an example. Suppose you have a property asset in South Mumbai, 2,500 square feet area. What is the today's market value? Around 40 to 45,000 per square feet. So the value of that property may be around 100 crores. As advised, if you insure it for 100 crores and you think that you will get 100 crores in case of any major total loss happen to that property, is it not? Then if you think so, it is wrong. Insurance company will not settle you 100 crores, the value you have insured it on that reinstatement value basis as advised. Then you would ask, why? What has happened? Then which value you are going to settle me? Tell you that insurance company will settle, sir, we will settle on reconstruction cost, replacement cost. What is that? Replacement cost, reconstruction cost. What is the cost of constructing that property? Then your builder will tell you, as per the thumb rule, 25 to 30% maximum of the property market value will be the construction cost value. That means you will be getting only 30 crore max to max, and that too after deducting all the excess as per the terms and condition of the policy. But you will not get in that 30 crore the prevalent value of 100 crore property, the same locality, same area. Are you not getting cheated? Or you don't feel, I am not expecting this. How to get my property reinstated then, when I am not getting a proper claim of 100 crores? Here, I want to give you one more information that in January 2023, a landmark judgment was delivered by Supreme Court of India by 2 judges bench. Oswald Plastic Industries claim was settled. Settlement offer was given on depreciated value basis, which they did not agree. And at various stage, it has come up to the Supreme Court after a span of 4-5 years. And after listening to the petition of Oswald Industries, Plastic Industries, Supreme Court judges gone through the insurance policy document, section 2, clause 9. They read it. In case of loss or damage, insurance company will reinstate or replace the property. Here, the insurance company did not reinstate, did not replace it. So, they have to pay the reinstatement value to the Oswald Plastic Industries, not on the depreciated value. The claim, they got it from the Supreme Court judgment. But my dear friend, don't you think that there is something is not correct? If it is discussed among the insurance executive technical people, they will say, oh, it's not correct. It's a travesty of indemnity principle of insurance contract. It is not the way that reinstatement is to be explained. Insurance judgment is wrong. But what to do? It's a Supreme Court judgment. They got the claim. So same way for your Colaba property, to get the 100 crores claim, you need to knock the door of Supreme Court. If such is the case, then you are going to take a decision for your property of immovable assets on reinstatement value basis. Do you think, is it a right value? Then you may ask your department, how do you get this reinstatement value, sirs? Then they may say, sir, We have a fixed asset register, and fixed asset register has the detail of the assets of our property situated all over India, and that was inspected by a chartered engineer, and the chartered engineer has applied some RBI indices depending upon the purchase value, purchase year of the asset, and applied some inflation and all the other components, and he has given the report, sir, this is the reinstatement value of our old property on new value basis. So this is what we have got the quote from the insurance company. That is the reason the premium outgo has increased from 20 to 25%. Here again the question, as we discussed, are you going to get the claim on this value basis? Again, at the time of claim, insurance company will appoint some engineer surveyor. They will come and discuss. They will come discuss, this is not the reinstatement value acceptable and this is the way. So the reinstatement value itself is a big point of discussion. What is exactly, what is the methodology, what is the correct way to arrive to the reinstatement value? Even if you arrive the reinstatement value, whether are you going to give me the claim on that basis? And finally, leave alone, my question here is it required for you to go for the reinsurance value? Yes, I am asking, I am telling, is it required? Is it necessary? I tell you, my friend, my experience. So long I have been heading the risk management, I have not gone for reinstatement value for insuring my assets and property. In that process, I have saved huge amount of insurance premium. I was also asked by the company auditor, F&Y, insisted for me to take the reinstatement value, and we have appointed a chartered engineer and got the value, and it was found out 40 to 45% my insurance value was not matching the reinstatement value of my assets. Then they said, oh, you have not taken insurance as per the reinstatement value for the property. So in case of claim, you will be 40 to 45%. Under insurance will be deducted. Sir, can you justify me why you have not taken on the reinstatement value basis for your fixed assets for the insurance purpose? Before explaining to that, I want to tell you one more practical day-to-day example to you, my dear friend. In this age of information, we get various information from WhatsApp, YouTube, Twitter, and from all social media related to our health. If anything related to our health, we are giving importance to know about it. And have lot of information on our health, and one fine day, if we find we are not little bit okay or not good in health, then immediately we recollect something happened to me, maybe due to that, due to this, and we could not able to come to the conclusion. Then what we do? We take appointment of our family doctor, MD physician. We go to him and sit with him. He asked me, what is the reason you are here, my dear? Sir, I am not okay. I feel little bit disturbed, uncomfortable. And maybe due to this, or should I go for this test? Or should I take this vitamin medicine? Or what is the medication I need to take? Kindly tell me. The doctor may be your family doctor from your grandfather. He has a total family history of all the family members, including you, and also what is the family history. So after going through all those things, he will tell you no need to do any test or any supplements. Just relax, have proper rest, take proper food, and do exercise and sleep. You will be okay. So don't unnecessarily think too much. too much of anything is good for nothing, and especially related to your health. I am here. I know what is required for you. I know your body immunity level. I know your family history. So trust me, nothing will happen to you. So we get relieved and relaxed and come back and not taking anything. Same way, your asset, your immovable asset, property has its own tolerance limit, risk tolerance level. Like our body, physical body, which has its own immunity level, your property also has its own risk tolerance level, which is very much visible to you for last 20, 30, 40 years. Nothing has happened. No major thing has happened. And it will not happen because of the construction and care that you are taking to run this plant in this industry. So when such is the case, what is the point of paying reinstatement value basis the premium for your well-maintained plant? And that also, in case of claim, it is questionable, are you going to get or not? So when my F&I auditor asked me, sir, tell me what is the reason, why not you insure your company's assets on reinstatement value basis, and give me the justification for not going for it. Then I explained to them, 40 to 45% is under insurance cost me to cover up almost 10 crores. Over and above the present insurance premium I paid for around 5 crores. That means I have to pay around 15 crores. But that 15 crores, my expected probable loss has never been in the past more than 10-15 lakhs, and especially for my civil, also for our plant. So when such is the good maintenance, sturdy, healthy tolerance level of my plant, what is the point? Why should I take the premium on the reinstatement value basis, which is costing me more? Just because nobody wants to take the risk. Something happened. Risk is uncertainty. So something happened. It is up to you if you are not insuring it on the reinstatement value basis. Nobody want to take the risk. Everybody want to take a mitigation process to take insurance cover and pay more premium without knowing it is required or not. So you comes under the pressure of your insurance company, agent or broker, company auditor, and your bankers to take insurance value on the reinstatement basis for your immovable assets, because nobody wants to take the risk. It's uncertainty. But my dear friend, it's a human nature. We fear of uncertainty, but also we fear more of imagination than reality. Yes, our fear is more of imagination, but not happen in reality. That is the real fact. That is the real fact. So, when I am not at all getting any return, or the intended insured risk is not at all occurred, why should I pay more premium? Who can able to tell me don't pay the premium? It's like you are a doctor. You went to the doctor and consulted. Same way, you need to get a consultant to assess the risk tolerance level of your property. The risk tolerance level which you can stomach some losses, which is a tolerable limit within your own cost. And that cost much more cheaper or lesser than the premium cost what you are to pay. For that, one needs a data, record, history, like an astrologer who can give some prediction based on the probability of the placement of the planets, what will happen in the future of someone. Same way, a real insurance underwriter, a real insurance guy, a real technically well thorough knowledgeable guy can predict the losses. This is true. This is a jargon. A true underwriter will definitely predict the losses, which I have experienced in my career. Very many times I predicted the losses, which is not at all thought of it by the management of the corporate company, and when it happens, they have got benefited. So it is a fact. What is required, what is not required, the sense of judgment is very much necessary for an insurance underwriter to advise you what to be insured, what not to be insured, and how much insured and to what extent. Do you get this type of advices? Insurance company will never tell you, and your insurance agent and insurance broker also don't want to take the risk of uncertainty. They will also not tell you. And your banker says, come on, you have to take it on the reinstatement value. And also your company auditors, everybody says you need to take on a reinstatement value basis. But is it justified? And who will justify it? Like your family doctor, you need to have a risk consultant of your asset, fixed asset, to go through the history and data of the behavior of your fixed asset property for the past several years since inception. And on that basis, he can suggest you what is required to be covered, what is not required to be covered, and if it is to be covered, to what extent. And to that extent, the premium can be paid so that the claim also can be settled by the insurance company, because most of the time it has been taken care of by your own self-tolerance limit of the property. So instead of unnecessarily paying this premium on reinstatement value basis, which is a myth, there are very many emerging risks is coming up on liability side. Directors and officers liability, product and public liability, cyber risk, crime insurance, various other liability insurance policies are very much ought to be covered adequately, properly, because there is a lot more uncertainty can happen in that area. For your export, no vendor registration can be happened by your export buyer without insurance policy. They do not know you, but they believe the insurance policies. So please focus on that instead of paying premium on the myth of reinstatement value basis. Hope you may be definitely get some input and to decide upon that how much you have to pay for this premium. And if you have need to consult with me or need to share some information with me, my contact number and mail ID is also given. You are always welcome. And in my next video, I am going to tell you how a very big corporate company, after several rounds of discussion, taken the policy on the reinstatement value basis, and when the property is totally destroyed in the very beginning of the first year itself, and they agreed for depreciated value basis, still they got a huge amount of profit in that settlement. This also happened, I have come across. So this type of real time case history of insurance claim, I shall share with you in the next videos. If you like this video, like, share and subscribe. Have a lovely day.